In this video, we talk about the general framework for financial reporting. We are going to be using 10Ks and financial reports throughout this course to really help explain how accounting works in the real world. And in order to really do that, we want to understand the various financial reporting requirements that exist and to see how standard they are across different companies. So financial information, which accounting helps to standardize, is presented in company financial reports. And companies have to file periodic financial reports with the SEC. And the reason why they have to do this is really because the SEC, which came into being after the Great Depression to protect investors, mandates it. We can find financial filings within the SEC website. If you go to sec.gov, you're going to be able to type in any company name and see a list of all the financial filings that the company's made. For filings in other countries, there's usually some platform that's similar to the SEC, but usually less comprehensive. I would say unequivocally the SEC is the most comprehensive place for filings. It's the United States has the most comprehensive government-run sort of clearinghouse for all of the financial filings, but the UK has something called Companies House. Canada has something called CEDR, and other countries may have their own. Sometimes there's a fee as well. But company websites themselves have usually investor relations sections, which also include the annual filings and quarterly filings. And there are these reaggregators, financial websites like Yahoo Finance, Capital IQ, and Thomson, FactSet, which also provide access to company financial filings. So let's talk about the Form 10K, which is in the United States the annual filing. At the end of each fiscal year, publicly traded companies have to file a 10K report, which includes a thorough overview of their business and finances, as well as their financial statements. The 10Ks have to be filed within 60 to 90 days of the year end, and whether it's 60 or 90 days really depends on the filer's status. If the filer is what's called a large accelerated filer, they have to file within 60 days. If they're a relatively smaller public company, they can file in as long as 90 days. But that's the general range of how quickly after the year ends they have to file. And the 10K is important because it's a required annual filing which has specific and required financial disclosures. It usually provides the most detailed overview of a company's financial operations and regulations. And at this point, it's probably worth us pausing and just identifying the difference between two terms that are used interchangeably. You'll often hear companies talking about their annual report, but you have to be careful because sometimes companies provide a polished annual report, which is basically a summary, glossy marketing type of document, which captures data in the 10K and adds some marketing fluff, but it's not the complete 10K. And as an analyst, the complete 10K is the primary document that you want to use for company data, as opposed to a glossy annual report. And if you're not sure what you're looking at, you can always go to the SEC website and download the real 10K. The 10Q is the name of the quarterly filing in the United States. At the end of each quarter of a company's fiscal year, except for the last one, which is the 10K, the full year. So for the first 3 quarters, companies file 10Qs. 10Qs have to be filed within 40 to 45 days of the quarter end, again, depending on whether you're an accelerated filer or a non-accelerated filer. And there are some real differences between the 10Q and the 10K. Broadly speaking, the 10Q is far less detailed than the 10K, which has a lot of detail and a lot of footnotes and a lot of disclosures you're going to really rely on. But let's get into some of the more granular differences. Both 10Ks and 10Qs include financial statements and important footnotes, as well as management commentary on the state of the business, but 10Ks are more detailed. A 10K will usually contain more details about stock options, fixed and intangible assets, debt, future expectations about how the company is expected to perform, as well as extensive management guidance and commentary in a section called Management Discussion and Analysis. One other interesting point is that 10K reports they have to be audited by an independent firm, whereas the 10Q filings don't have to be audited. They are reviewed by a CPA, but they are not audited, and there's a difference. A review is not as detailed, is not as robust as an audit. And that's important because an audit may sometimes highlight certain financial information and valuation methodologies that it believes represent red flags or don't conform with GAAP. And you'll see the auditor's note, it has to be baked into that 10K. Not the case with the Q. There are other important filings which you're going to encounter. We'll talk about two of them real briefly. The first is the Form 8K, and this is really a required filing anytime a company undergoes or announces anything materially significant, but outside of the 10Q and the 10K filing date. So if 2 weeks after the 10Q is filed, a company announces a press release that they're going to acquire another business, that's going to be something that's wrapped up in a Form 8K and submitted to the SEC. Usually these are filed within 4 days of the event, and if you're talking about big companies, it's usually the next day or even the same day that there's a materially significant announcement. And then the next filing you should at least just be aware of is Form 14A, called a proxy statement. The proxy is a required filing prior to a company's annual shareholder meeting. It contains detailed information about officers and their compensation. Proxies also are filed when a company is acquiring another company, or really anything material that requires a shareholder vote. So a proxy, when there's a big event, you're going to see a proxy that solicits shareholders' vote. And so those two filings are filings that you should be at least aware of. Below, we've listed some other filings. For example, if a company goes public, they're going to file something called an S-1. If a company acquires another company, once the proxy is submitted and once after the 8K is filed announcing the material event, an S-4 is filed once the deal is actually done, which really provides a whole slew of really useful financial data for analysts who are looking at acquisitions. And the last filing here that you should be aware of is a 20F. Anytime a company outside of the United States has securities trading in the United States, their annual report also has to be filed with the SEC, and that's a 20F as opposed to a 10K.